Hi friends, I am Money. I'm the blogger behind getmoneyrich.com. Today in this video we will talk about the concept of affordability. And when we are talking about affordability, we will mainly talk about whether loan is good or not. So in this video, our focus will be mainly on the loan and how it that loan is creating the affordability factor for us, and whether that affordability is good for us or not. So a loan derived affordability is good for us or not will be discussed in this video. Now, before we go into the depths of affordability and the loans, we have to understand that from where this need of loan arise in us. So basically there are three reasons. First of all, people who take loan to satisfy their needs in a quick time. It is, in short, we can say that it is a method to quicken the gratification. So we want to buy something and we want to buy it now, and the way to do it is we have to take a loan. The second reason, which is also linked to the previous one, is we opt for loan because we do not have sufficient savings. We earn money, but we have not saved enough to effect that purchase. So we want to buy it now, we don't have savings, and in a turn we opt for the loan. Secondly, the loan in this we can say the world has been marketed in a way that people think it as a tool. It is a financial tool. It has been marketed like that, and this loan gives us that false sense of affordability. When we take a loan and we pay the EMI, it gives us that false sense of affordability that we can buy this particular thing because loan is available for us. If loan would not have been available, probably we would have never buy that item because we have not saved enough for that. So these are the three reasons why we take loan. Now, there is also a bigger picture to it. At present, the whole world's economy is loan based. What I mean by that, I will explain it to you. Everywhere in the world, the economy is driven by consumer spending. When people spend more in a country, the GDP of that country grows at a very fast pace. For example, USA. USA is a very consumer spending focused economy. People living in that country believe in spending more. And that is the reason why it is one of the biggest economies of the world. And what is driving the economy of that world? Consumer spending. So consumer spending per se is not bad, but the problem comes when the consumer starts to spend not from their income, not from their savings, but from the borrowed money. And what is this borrowed money? This borrowed money is the loan. So we can say that loan not only gives us that sense of false affordability, but loan also helps the economy. So there are two factors running against us and in favor of the loan. First of all, our government wants us to spend more. And why they want us to spend more? Because if we spend more, the GDP will grow fast and the economy will become bigger. So that is in favor of the government. So more spending means bigger GDP, and bigger GDP means more inflow of investments from abroad. There will be more cash balance, dollar balance in our economy, and for a country like India, which is so much dependent on crude oil imports, for that kind of country, the bigger size economy, more uh, money flowing in from abroad in US dollars or in euros, will make our purchase of crude oil more affordable. So government wants their citizens to spend more, and in a way that will help the economy. But the problem here is government's intentions are not bad, but our economy is framed in a way that uh, the consumer spending is not based on the income of the consumer. It is more based on the loan taken by the consumer to buy things. Suppose my income is 100 rupees and I want to buy an item of 10 rupees. So if I have a 10 rupees savings, I can straight away go and buy that item. But if suppose I don't have that saving, what I will do? I will go to a bank, take a 10 rupee loan, and go ahead and buy that item. So even though I didn't have sufficient savings, or we can say I didn't have sufficient income to build that 10 rupees savings, still, because loan was present in the economy, that tool is present in the economy, I went ahead and bought that item. So for the government, economy and growth of the economy is a priority. And unfortunately, the economy grows when consumer spends, and consumer will spend if we can give them more cash. So there are two ways of giving cash to people. Either we increase their income or we give them loans. And we package that loan in a way that people can pay back that loan easily in time. So this is where the concept of EMI comes. We take a 50 lakh rupees loan and we go on paying 50,000 EMIs for years and years and years. People who have sufficient savings, for them 50,000 EMI is nothing, but maybe at that point of time they didn't have 50 lakh rupees, but for them paying 50,000 was affordable. So this is that false sense of affordability. They didn't have 50 lakh rupees, but they were capable of paying 50,000 rupees. So this gives them that false sense of affordability, and they went ahead, they took the loan, bought that item, and in a way, they also help the economy to grow because they are spending. So loan is the trigger. This is the thing that we must remember. So what is the right thing to do for we common man? Let's forget about economy, let's forget about consumer spending, let's forget about the loans. What is the right thing for us to do? It's very simple. We must earn money first of all. Secondly, from the money we are earning, we should save. And from the savings, we should go ahead and buy things. So this is the right thing to do. But what we actually do, we do not save enough. Earning an income is only the first step, but it's not the main thing. The main thing is how much we can save from our earning, because like companies, we also have overheads. If we are earning 100 rupees, maybe 80 rupees is our overhead. It will happen, those expenses will come. But the balance 20% is the savings. That is the focus that we should strive. That should be our goal. That if we are earning, we should at least save 20%. So what we actually do, we earn, we save less. And for example, let's suppose we have to buy a car, and because we have saved less, what we will do? we will grab something from the car loan, merge it with our low savings, and this becomes a package, and the car starts to look affordable to us. So this is a common practice. We save less, we dig into the loans, we take loans, we pay the EMIs, and we buy things. So this is not the right approach, and this is not the way we should conceive affordability. If you are able to pay the EMI, the thing becomes affordable. This is the wrong concept. We should not fall into this trap. The second example is even more interesting. In cities like Mumbai, Delhi, Bangalore, in metros mainly, even a decent 2 BHK house can cost somewhere around 60 lakhs to 1 crore. Obviously, for a middle class Indian, they will find it very difficult to build this kind of savings, 60 lakhs, 1 crore savings. I don't think any middle class Indian will have this kind of savings. So what we do? When we have to manage an expense which is so big, like a house, 1 crore rupees, we have already built the notion that house affordability is difficult. So taking a home loan is the right thing to do. Everyone does it, so we should also do it. So this is the problem. So how we can go ahead and buy a house? First of all, we have to earn, and then at least build 50% savings to buy the house. At least build 50% savings. I know it is a challenge. If you're going to buy a house of 1 crore, building a 50 lakh savings is a very big task. But still, this is what you have to do. Now, someone might say that I'm a middle class person. I have to buy a house in a city like Bangalore, and the house, even a standard house, costs there 1 crore rupees. More in Mumbai, similar in Delhi. So what we should do? We should not buy a house. We should not take loans. So the question is right, but here we have to think. We have to imagine things more rationally. Now suppose you think that you are not able to build the savings of 50 lakh rupees. In no way you will be able to do it. So this is a hint that probably the 1 crore house that you want to buy, that is not falling within your affordability limits. If you think absolutely that there is no way I can build 50 lakh rupees savings, then this is an direct hint that that house is not affordable for you. Go for a house, let's say 50 lakh house, and then the 50% self contribution will be 25 lakhs, and that may start to sound more reasonable to you, that yes, maybe in next 5 years, 6 years time, I will be able to build that 25 lakh savings, and then I can go ahead and buy the house. So this is one example. This is just an example. I know there are many shades, many difficulties in buying a house. I have simplified it too much, but the thought process should be like this. That first of all, the rule should be that I have to pay for the house at least 50% from my pocket, and the balance can be home loan. So this is the rule. Now, so what is the key? Out of all what we have discussed now, what is the key? The key is we have to start building savings. We have to be very aggressive in building our savings. So, how to save? Saving is not that simple. Why saving is not simple? Because you have to do this month after month for years together. It's not that you can save 5,000 rupees this month and for next 3 months you do zero savings. That will not do. The savings, like income, flows in every month. Our savings should also continue month after month without fail, because a large corpus has to be generated. We cannot afford missing months in between. We have to save every month. So, the trick to save all months without fail is budgeting. And what we have to budget? People generally talk about budget for expense. No, we have to budget for savings. Income is 100 rupees and we want to save at least 20 rupees. So budget for that 20 rupees. Budget for the savings, and the balance, what 80 rupees is left, that is left to manage the remaining expenses. And that those expenses, that must further be broken down, and each expense head must further be budgeted, and the expenses must be tracked. If suppose the expense head is called groceries and vegetables, suppose food or whatever you call, and if you have budgeted that for groceries and vegetables you will not spend more than 10,000 rupees in a month, so this is the budget. And then of course we make repeated purchases on this expense head. So keep noting down all these expenses, and at the end of the month you will know that my budget was 10,000 rupees but I have spent only 9,000 rupees, so I am within my budget. Moreover, I have 1,000 rupees as an additional savings. So you tighten your grip. So what you are doing here is you are tightening your grip on the expenses to make sure that 20% savings that you have budgeted will always happen. So this is the way we should save. Saving is not that simple. We have to first budget, we have to track, and these two things in turn will ensure that we are saving enough. So, in conclusion, what I have to say? First of all, we have to save. The focus should be savings. And once we have saved enough, then only we should spend. And above all, our mind should be single-mindedly focused on this fact that we have to remain loan free. Even in case of a purchase of home where it is very capital intensive, and probably most of us will never be able to buy a home without taking a loan. Even if in that case we have taken a loan, make regular prepayments and try to become loan free as fast as possible.